Hello, I'm David Chaston with 90 at 9, brought to you by Interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock, with news the China home team is putting on a spectacular display. Wall Street and American equity markets closed flat on Friday, but that was in sharp contrast to Shanghai, which was up a spectacular 2.6% on the day. It sprang to life in the afternoon session, all happening in the 1 hour to 2:15 at their time. It had all the hallmarks of a stage-managed pump by the home team. Then yesterday, it rose even more spectacularly, up another 4%. Some of that spilled over to the Hong Kong markets, which were up 2.3% yesterday. All this comes after the Chinese State Council said it will support the private sector, following up with the central bank issuing the credit. Public sector stimulus isn't doing the job, it seems. The effect of all this on other international markets? Not much. Meanwhile, this S&P 500 is a little lower on Wall Street this morning, and that follows a similar trend in European markets earlier. The US National Economic Activity Index has slipped more than expected. In Canada, they had a surprise fall in their rate of inflation. It came in at 2.2% in September, down sharply from 2.8% in August. Easing petrol costs were behind the reduction. A surprise fall in the level of retail sales in August was also reported, a surprise because a rise was expected. China's economy grew at a slower than expected 6.5% in the third quarter, the weakest since the global financial crisis. Retail sales, however, rose faster than expected, up 9.2%. With that retail sales data is something of a milestone from an outsider's point of view anyway. In the first 9 months of 2018, national online retail sales in China amounted to 6.3 trillion yuan, which means in US dollars it's more than $1 trillion. On a year-on-year increase of 27%. In 2017, it took all of 12 months to achieve a $1 trillion level. Home sales in major Chinese cities were stable overall in September as local government tightening property curbs weighed on the market, especially in the large cities. And Moody's has reduced Italy's credit rating to its lowest investment grade of Baa3, one step away from junk rating. This downgrade is a direct reaction to the Italian government's decision to accept higher budget deficits in coming years. In Australia, a key by-election has brought a 20% swing against the current Conservative federal government, removing the slim majority the government had in Canberra. US Treasury 10-year yield will start today at 3.19%, with their two-turn curve now under 29 basis points. Other yields we follow were basically unchanged. The Aussie government 10-year is at 2.71%, the Chinese government 10-year is at 3.59%, while the New Zealand government 10-year is at 2.69%. And gold is at $1,222 an ounce, and it's down $4 overnight. US oil prices are marginally lower as well, just under $69 a barrel. The Brent benchmark is down under $79.50 a barrel. And the Kiwi dollar will start the week a little softer at 65.5 US cents. Of the cross rates, though, we're a little higher at 92.5 Aussie cents, and that's the highest in 16 weeks, and at 57.1 euro cents. That puts the TWI at 69.9. I'm David Chaston. That was 90 at 9, brought to you by Interest.co.nz.